This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. And we've got the dollar that came way down, all the way to 99.4, but take a look at it on the weekly. It's right here back to support. So this is the January effect of a rising dollar into wash. And now they're not so sure he's going to have such a great formula for managing inflation. He says, trust me, bro. And here is a trend line that I drew for the dollar, and it's come right back down to support. Gold is aptly not loving this. So whether you're thinking it's an inflationary tell or what have you, it is responding negatively to a falling dollar. And I'm still bearish precious metals. We have the market surging higher on basically Iran risk pushed off once again. And I've got some levels for SPX that I talked about right here, which is this gap back inside 7,400. It had a gap fill. Remember that gap fill of 74.85.85? Well, we hit it on Friday, right? Little shake and bake. And now we're back above 75.17, pushing into this trend line. We get above this trend line, we move higher. And also notice SPX has not broken. And by the way, I mean closed below, has not closed below the 10-week EMA, not once, even though it's gone sideways. So all gains, right, May, June, July, have just been sideways. Theta decay killer for those who are in the option mode. But now that we're above 75.17, we're heading back up into that trend line, and we have an upside gap fill that has not been filled from all the way back in June, early June of 75.84.41. So SPX moves higher, and the Qs right now are still sideways, but look at that. Excellent. That was a price target of basically 683, right? We overshot it, came right back in. And I said, if we get and stay above this 683 in the QQQ, we can move up into 701. But obviously it's a laggard, relatively speaking, to SPY because it's got a whole bunch of semi names that are still under the weather. And you can see it. They're just still rolling lower. This is 1, 2, 3, 4, 5, 6 weeks of red. So not a lot of momentum in the semi trade. Micron's still sitting on that 780 price target. That was a beautiful short, and it's still just sitting sideways. And that's the nervousness. So the AI concentration risk, even the mags, I'll go through that and I'll show that to you. But basically, hyperscalers got a little bit of a bid. Software, still they're rotating out of software, hardware into software. So you've got yields that are still in this sticky area. They're not falling apart. Huge breakout in the 10-year above 4.7, and now it's back below 4.7. But this is the line in the sand above 4.8. And we start to get some gnashing of teeth. And oil, of course, contrived Iran de-escalation, but which, by the way, Iran says Trump's full of it. There is no negotiation going on whatsoever. But the markets, again, thin liquidity over the weekend. This happens all the freaking time. Intervention on the oil market, helping pull yields down a little bit. Intervention in the yen market, helping pull dollar down a lot. Intervention here, and yen is helping the markets stay bid. We're not really doing anything, I think, aside from a reflexive bounce. And then we have CPI coming in August 4th, which is impactful, but I think that'll also push rate hikes out even further because I think it'll be soft. And that's what we're going to be looking for, is that bounce into from FOMC, right? We will fall into FOMC, and then we bounce into August 12th. So bulls obviously need a little bit more time here, but we had this oversold, retail sold in South Korea and here, and now they're coming back in fast and furiously. You've got semis, as I mentioned. Come on. Hyperscaler love has returned. All right. You get the value pumpers out there going, hey, look, right? Semis are the cheapest out of the sector rotations. They're 22% cheaper than the staples. So this is what I had posted last week as watch this space. Hyperscaler love has returned. And this is what we get right now, first of the month. You've got some statistics where, again, the bullish backdrop is in view. Long story short. And it's funny because I said Fed day out of the way. Now the Bank of Japan paves its way. And sure enough, they're talking more hikes toward the end of the year. And that's what the looks like so far. But I have this one chart I wanted to show, and then we'll get into anything else, which is right here. And I think this Bank of Japan thing just requires that thought, that we have had a intervention. I wrote about this in January, in fact. It's kind of funny. I said there's less impetus for the upside in the USD JPY if the USD keeps falling. Well, it didn't. Warsh entered in January. What happened in January? The dollar stopped going down. I said until the Bank of Japan hikes, likely not for 6 to 9 months. That was January. They hiked in June, and they telegraphed it loudly that they were going to hike. They did, but it wasn't right away as most feared. It didn't happen until June. Now they're saying end of the year, probably comes in sooner, September timeframe. But the point is they didn't start hiking until June. And then what happened? They came in and supported the yen in July. And I said yen would strengthen, and likely not a lot until we can get the USD JPY in the 151, 148 or lower. Where are we right now? 155. So we're having a policy intervention yen spike. But we would need to get, this is the important part I'm trying to get, we would need to get below this kind of 151 area, 148 area, in order for the dollar to really come down and yen to really stay up. And I said, honestly, these are quotes I had in my January client post. Before US markets are truly interrupted, end of year more likely. We've already moved very, very aggressively. Once we got back inside this wedge in SPX, boom, here we are. We could have a little overshoot to 75, 84, 41. I fully expect that to tag. But then we have to get above everything and stick that landing. The dollar coming back in is a big tailwind. Yields staying sticky and threatening is a big headwind, but the market doesn't know it yet, not until it's above 4.8. And oil, obviously, crashing lower on a thin liquidity weekend headline is sus, totally sus. All right, so that's it. We're waiting for 7584.41 is the gap fill on SPX. And then are we going to pull up with Qs? If so, you've got my level. We need to get above 701 and then really get above 710. Remember, that was I think we're going to pop into 710 and then drop. We did. So now we need to get back above 701 and then 710 to move up into these higher levels. So the MAG 7, the love for hyperscalers. What I can see right now is SPX almost at my price target, 75.84.41, and then it should come. If we get going, obviously, we get and stay above this, we're going to have a lot of chasers, a lot of folks that are AI bulls looking for redemption. I wrote about that. They're going to have absolutely the 78, 7,900, what do you call it? Here it is, 77.26 would be the first price target. Once we get and stay above this level right here, we've got to fill that one first. So don't be surprised if we hit it, come back in a little bit. But once you get and stay above that trend line breakout, we got to be on alert for fake breakout, fast failure kind of thing. But ultimately, this is a positive gamma chase on strong growth bounce, reflexive bounce, Fed hikes pushed out, CPI coming in, likely softens on the 12th. Earnings, awesome. Semis, stabilizing on a dollar pullback, yen intervention, and fake oil headlines.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.